Good afternoon, and welcome to another episode of Real Estate Talk with Lisa. I'm so glad you're joining us today. Got a lot of numbers to throw at you. As a matter of fact, if I had to give today's show a title, I'd say Real Estate by the Numbers, kind of like paint by numbers. Then I thought about the lotto too, because you're always looking for your winning number. But we're going to be going over quite a few different types of numbers and different categories pertaining to real estate. So you may want to take some notes, or you may want to just tag it and come back and review it later when you're in a position to take some notes. If this is your first time checking out our show, just want to let you know, my name is Lisa Jeffery. I am a local area realtor here in the DMV with Fairfax Realty. That's my brokerage. Right in Greenbelt, my broker is Rodney Bennett. And we started this show, Real Estate Talk with Lisa, because we wanted to provide an opportunity to discuss relevant and useful information in the real estate field for our area. So now, our theme for our show, if you will, is opening the door with keys of independence. And of course, to have independence thought, you have to have good information. And so that's why we're here. We're here to educate, empower, and motivate you to some positive action in the area of real estate. Time plus motivation can equal home ownership, can equal investment property. But during that time that you're putting with your motivation, we want you to be prepared and educated. And that is why we're here. Now, if you need to reach us, right now, if you're watching us on WBGR's Wellness Network. It's where we air every Thursday, 2:30 to 3:30. And you can always find us here. You can find archived episodes of our show on their Facebook page. You can also find us on our Real Estate Talk with Lisa Facebook page. And we also have a Real Estate Talk with Lisa YouTube channel. So you can reach us in any of those areas and come back in. If you're not in a position to take notes or you want to share the episode with someone, those are some of the ways that you can do it. Now, if you'd like to reach me personally, you can reach me at lisajeffrey38@gmail.com. And yes, I do answer my own emails, not Oprah yet. And if you want to call me or text me, you can reach me at 301-542-5168. That's 301-542-5168. So we're looking for you to reach out to us. I want to give a quick shout out to my team. I have a fabulous team that makes sure we get the show out every week, help schedule our guests. So I'd like to thank Nicole King. She is our photographer and our social media manager. And she does a great job for us here at the show. And of course, you've met our other team member and sometime co-host, Miss Reba Burris Barnes with Reba Associates International. And Reba handles our booking. As you can see, she makes a great co-host, gets those announcements out for us to let you know what the next episode that is going to air, and a lot of times information about our guests when we have them on. And if you have a desire to be a guest on the show, you have an area of real estate that you'd like to see us discuss and explore here on the show, you can pass that information on to Reba, and you can reach Reba at 301-420-0000. Again, that's 301-420-0000. All right, so let's dive in. I wanted to pass on one piece of information. A couple of weeks back, I had encouraged you and posted on our Facebook page an option to sign like a petition for the homebuyer savings account for Maryland. The state house was a state legislature, if you will, was reviewing that and trying to decide, if they're going to pass it. So I just want to give you an update on the status. The purpose was to establish a tax-free homebuyer savings account in Maryland. And it says, although the legislation was passed unanimously in the state Senate, it wasn't passed by the House of Delegates. Okay, the House chair of the Ways and Means Committee did not support the bill, and numerous amendments were discussed which would have diminished the effectiveness of the legislation. So if that was something that when we talked about it on the show, if you hadn't been previously aware of it, that you'd like to see them consider again in some format that could get passed that would still be of benefit to the residents of Maryland. Maryland hasn't always scored high with respect to affordable housing nationwide. So this could be a way for Maryland to kind of help close that gap, giving a hand to the residents. Please reach out to your representative and let them know, how you feel about it. Okay? So that was just something I did want to come back and follow up with you on. Now, the Maryland Realtors has issued their report that talks about the different pieces of legislature dealing with real estate or real estate related issues and how it fared in terms of being passed or not passed. And so I'm going to post on the page an opportunity, the document, for you can take a look at it and see what's going on in terms of real estate related legislation. And of course, we have elections coming up in June. If you're not registered to vote, definitely register and make sure that you know what the candidates stand for, what they are proposing, because many of the things that get voted on once they're in office affect you directly, whether it's property taxes, whether it's how money is going to be distributed, legislation, like some of the topics here. They were wanting real estate agents to provide voter registration information to home buyers, but that was defeated. One, for some of you that may be looking at maybe doing an Airbnb, there was a bill, House and Senate bills for limited residential lodging. It required homeowners, among other provisions, to register as a hotel, motel, and comply with local laws if homeowners listed their property on sites like Airbnb. And this bill was defeated by the House Economic Matters Committee and never voted by the Senate Finance Committee. But that affects you. If you have your property and you're seeing that as an additional area of income for you, it's important for you to know what your legislators are voting on, what's before them, how they voted, those kinds of things. So that's why it's important to know what's going on with respect to the laws and why it's important to vote. So the need to vote has not been diminished with time. There's no time to sit back and not let your voice be heard. So we will post this on the site for you to be able to take a look at that information. Now, we're talking about numbers today. So one of the things we want to talk about, one of the numbers that a lot of people watch are the interest rate forecasts and where we are with those. And of course, if you're like most people that may have kind of maybe been paying attention, you know that the rates are going up. They may go down a little, then they go up a little bit more. I mean, I have one client that I've been working with, and they looked for a while and they stopped and they came back. And so the experience that they've had is, at one point when they were looking, the rates were in the threes, maybe high threes, mid threes. Now, they're, depending on certain programs, they may be in the high fours to mid fives, depending. Now, that's not the average rate, but there are some programs where the rate may be, at a 5. So that's just the thing, is that we are continuing to see them go up, and they are continuing to rise, and they're surpassing previous year records in terms of the rate, previous recent year records, I should say. Now, the home buyers now will probably pay $150 more per month on a $350,000 mortgage if they're putting 10% down. That's from an article by Tim Lucas called the May 2018 mortgage rate forecast. So when we talked about what makes up your mortgage, we talked about the PITI, which is your principal, your interest, your taxes, and your homeowner's insurance. And those taxes are your property taxes. So if you're paying more for the money that you're borrowing from the bank to purchase your home, then your interest portion of your payment is going to be higher than it was. And so that's how that affects your payment. Okay? So a lot of the predictions, the Mortgage Bankers Association is predicting rates as high as 4.9 this year and maybe 5.4 next year. The Freddie Mac is thinking 4.6. Fannie Mae is thinking 4.5 for this year. Freddie Mac has a higher thought for next year, maybe about 5.1, and Fannie Mae is saying maybe 4.5. Realtor.com is saying they're predicting maybe rates to get up to 5% this year. And the National Association of Realtors is thinking 4.5 now, 4.8, 2019. So what does that mean to you? It means that if you're trying to make a move, you need to move sooner rather than later in terms of if the rates that are currently available are a more attractive rate for you. Because for some of you, rate change can make the difference between moving and not moving. So you just want to be cognizant of what's going on with respect to those. Now, one of the things that the article was talking about was, the things that contribute to rates increasing. And of course, when the economy is doing well, people have more money. Consumers may do a little more spending, but they can buy more houses, so the price of houses go up. And of course, in our case, with the inventory being lower, the housing prices tend to escalate a lot more quickly because there's less availability. Okay? So you want to just keep an eye on your forecast. So if you're a buyer, even if you're thinking about, not buying until next year, you want to go ahead and, take your financial temperature for readiness and see where you are. Talk to a lender, find out what you can buy now, what the rates look like now for you. And if you still want to wait, at least you can anticipate, okay, let's say the rates go to here. This is what my picture may look like at that point for the same home. Because as I mentioned before, when I was talking to the client, we were talking about just the rates and the effect on the payment. She had a particular price point that she wanted to stay at with the payment. So now what happens is, if that price point is exceeded because the interest rates are higher, she's looking at a smaller priced home. But a smaller priced home that meets her family's needs may not be in the marketplace anymore. So that's some of the dilemmas that you may face when you're looking at juggling that interest rate, trying to decide when to step out into the market. Okay. Now, when we're talking about stepping out into the market, I want to look at a couple of items. I've got statistics for DC, Virginia, and Maryland in terms of housing sales, and we're going to go over those in just a moment. Okay. Now, one of the things you may look at is, okay, if the interest rates are going up, what should I be looking at in terms of saving some money? What kind of resources are out there for me? And so, I've had my different lenders in talking about the grant programs, talking about their particular financial programs, and there are more properties that qualify for that grant now. because of the plethora of programs that are out there, but you kind of have to watch them. Reggie Derrickson was here with Old Line Bank, and he was talking about where you may qualify for one program but not qualify for another program. Brian Washington's been here talking about some of the options that prime lending has. If you've had maybe some devastation previously dealing with property, but you're ready to get back out into the market, some things that they offer there, some programs that they offer for veterans. So there are different programs out here for you. Fidelity Direct spoke to us about going ahead and getting that renovation loan, because in some cases now the property that you may have been looking for, you were looking at a new property at this price point based on the interest rate. Now you may need to turn and look at maybe a renovation property with a renovation loan, whereas Brett was so often to say the not so shiny penny, because that still may meet your need, and you have the option to now customize that as you would like. So you want to look at the different options that you have along with the programs that are available. Now, I was on the down payment resource page, and I'm going to be putting a link up for them, and they do a lot of data gathering with respect to national down payment programs. What's available? Are they funded? What types of programs? And they have an infographic. I'm going to post that on the page. Make a note here to put that up for you to take a look at on our page. But one of the things they were talking about is that they have about 2,500 down payment assistance programs that they look at. So they've only lost maybe about 4 programs since last quarter. Okay, so those programs are still active. Now it's going to depend on the area, because they're looking at a national picture. Okay, so not all 2,500 programs are available, say, in Maryland, but Maryland does have quite a few. So there are different types of down payment programs, okay, for you to look at. Now, some of those are the down payment assistance programs that you may see is the grant programs, where it's a gift, there's no lien, you don't have to pay that back, and it's just a grant that's provided to you. So that's one type of program. Now, some of the other types of programs are, and these are for like down payment assistance. So you have the grants for that. You also have a repayable second mortgage. So a lot of times they don't accrue interest. Some may, but they're a second loan, and you just would repay that back, and it kind of fills in the spot there where you may not have the funds to fulfill that. Now, there are silent or deferred second mortgage programs, and you don't have to pay that back, say, until you sell it, refinance it, no longer an owner occupant. That's when it comes into play, and that's when you become responsible for it. And then there is the forgivable second mortgage program, which is if you stay, let's say it's a 10-year period that you've got to stay in the home. If you stay all 10 years, then you don't owe anything. If you leave after 5 years, then maybe you owe 50% of those funds back to the program. So it's good to investigate those. We will be picking back up with our Show Us the Cash segment of our program going forward into the second quarter and into the summer, so that you'll still have the opportunity to hear in the studios and directly what some of the banks and other financial institutions are offering to you. So don't discount those. I had some conversations previously in the past couple of weeks with different groups talking about the grants that are available, because a lot of times you can go and you can get a quote for a loan. You can go online and fill out something, and you can get yourself a pre-qualification or pre-approved. They didn't even really get that much information from you. You told them, I make this much. It's 3 of us in our household. I want a home loan, and they'll send you something. Sometimes that's not as good as someone that has sat down and talked to you a little more in depth about what you have, but you can get that approval. But now, what I would say to you is make sure you're aware for your area what funds are available to you, because that lender that you may have gone to may not offer the programs that can help you. So you need to make sure what they offer. And if you hear about a program, you go online, you go to the Maryland Mortgage Program page or one of the other grant pages, and you see a grant that you think you may qualify for, you go to them and you say, hey, do you offer this grant? And they say no, then it behooves you to take a look, to contact someone else, because otherwise you're leaving money on the table. And you don't ever want to do that. If someone is offering to help you, trust me, you want the help. Now, there are times when because of some of the tweaks in a program, to get the help, it may cost you more. Maybe the interest rate for that help is higher than if you didn't get the help. And maybe that lower interest rate puts you in a better position. So you have to weigh that. Compare your apples to apples and see how that looks. But you owe it to yourself to look and never walk away without checking. If it means you got to fill out some extra paperwork, come on now. I feel like this. If you told me there was a pot of gold, 10 flights up the steps, I might have to stop at every landing. Well, for me, maybe every half a landing. But I'm going up there and get the money, okay? It may take me all day to get there, but I'm going to get up there and I'm going to get the money. So that's the thing. You want to make sure, because we often talk about, I wish they had this, I wish they had that, but we don't always take advantage of what they have. And then when we find about it later, after it's gone, like, oh, they had that. I could have used that. You should have used it. So I just want to make you aware that there are still programs available. I'm looking to get a link for the down payment resource hookup on my website, and when I do, I'll announce it to you guys on the page. We can go on and just put your information in and pull it up, and it'll give you programs in the area. And like I said, we do have our local realtors lenders that we have come in and share that information with you. Okay? So now, we're looking at statistics. So I've got Virginia, I've got, Maryland, and I've got DC, Baltimore. So let's look at Virginia. I don't talk about Virginia as much, but we'll be providing a little more additional coverage for Virginia. And I have a couple of Virginia realtor colleagues that are doing some big things in Virginia, and I want to have them come in and talk to us a little bit about what they're seeing in the local markets. So that's something that we're planning to have for you. But looking at what's going on in Virginia, it says Arlington County replaced Falls Church City as the most expensive location in the region. The median sales price, $564,250. That's the median. Now, if you guys remember the last time I gave you numbers and we were talking about, definitions, median means that half of the houses sold in Arlington County were below that price, and the other half were above. So that's what median means. Average means if you took all of the houses together and divided them by the number of houses. All right. Now it says Fairfax City saw an uptick in median price. It was $494,000 in March, and it went up to $550,584. That's an 11.5% increase. So what is that telling us? Rates are going up. Housing prices are going up. Pay attention to what's going on in the market. Now, Fairfax County had a 1.8% rise, going from 497 to 506. Okay. But both Falls Church and Alexandria City saw decreases in median sale price since last March, with Falls Church prices decreasing 9.2% and Alexandria by 2.9. Okay. So, now it says that even in Virginia, we're seeing the same thing that we're seeing in Maryland in terms of inventory, properties available to sell. And only Alexandria City saw an increase in closed sales. Okay. All the other jurisdictions showed declines, with the largest in Falls Church City at 15.4%, and the smallest decline was in Fairfax County at 1.5%. So the pending sales, which are the properties that are under contract, are going up in Fairfax City by 10%, 10.8%, and a slight increase in Arlington at 1.7%. So that's just to let you know that there are certain areas in Virginia that are growing a little more quickly in terms of the number of closed sales. It's really just that, really Alexandria City. Everything else is declining, but the pricing is continuing to escalate. Okay. Now, when we look over here in Maryland, this is from the March report. The median price in Maryland actually went up 5.4% to $283,405. So some of you people in Virginia coming over with that median price. Okay. So that was our 5.4% change from the same time in 2017. Now the average price in Maryland was $327,104, and again that was a 5% increase. So the pricing is going up. The median price is going up, but the number of homes sold went down by 300 homes over last year. It was actually a negative change, a negative 5.3% change. So you're seeing the prices go up, maybe not at the same level where you're seeing in Virginia, but you're still seeing that price increase. But you're also seeing less homes sold overall because less homes available for sale. Okay. The number of houses under contract, again, almost 600 home or 600 unit difference over last year this time. There were 9,118 pending units in 2018 in March. In 2017, there were 9,799. So you can see that the change is there. There's only 18,973 active units now. Same time last year, 197. So you can see, it's across the board. Okay, so that's why when we're talking about maybe looking at a renovation property, that may be your way to go. Now, for those of you that are investors, if you're picking up properties to renovate them and put them on the market, it's prime time, right? Because there's not that much available on the houses, and perhaps an owner-occupant may not want to do the level of work that may be needed, but you may be in a position to pick up a property and get it to market and be able to provide a nice home or a nice rental property for a prospective home buyer or tenant. Now, in looking at the DC Metro overview for March, the median sales price was $435,000, and it was up about $15,000, which is 3.6% compared to last year, and it was up $25,000 compared to last month. So it's not as much of an increase from last year, but compared to what was going on last month, it is a significant increase, 6.1%. And the sales volume across the DC metro area was 2.2 billion, which is down 2.6% from last year. The closed sales were down, and it's the fourth consecutive month that the sales have been down over last year. The same time last year. New contracts were down 6.2%. Now, even the new listings in March were down by 7.6% compared to March of last year. Okay, so you are seeing that decline in terms of some of the activity going on, just because the houses aren't there. Okay, now when you look at Baltimore, you see a little bit different picture. And I think when we were last before you, we talked about Baltimore being a kind of hot property market, especially for investors, and it being somewhat of an emerging market. So what you're looking at is the Baltimore metro area median sales price was $259,000, but it was up 5.7% from last year's $245,000, and it was at the highest March level of the decade, past 10 years. Now, the sales volume of more than $905 million was down 2% from last year. Okay, and the closed sales were down 6.3% compared to last year, and the new contracts was down. Okay, so the activity is going down in terms of active listings, but it says that the average percentage of the original list price received at sale was 96%. Okay, and that's the highest March level of the last 10 years. So it still says that Baltimore bears some looking at in terms of what's going on in the market there. And we'll put links to all three sets of statistics in terms of the recent sales for you, courtesy of MRIS. One set that was for the DC and the Baltimore area. The Maryland Realtors site was the provider for our stats for the Maryland March, and then Northern Virginia sites that we use was the Northern Virginia mag.com site. Okay, so we'll link either to that site or to NVAR. Okay, so we're giving you a lot of numbers to think about. So we talked about what's going on in terms of sales, in terms of inventory. So what does that say to our sellers? Well, what I read today, an article with by Sue DeVita with RIS Media, was that May is the best month to sell. Can you believe it? So all of you have been holding out all this year. Put your house on the market. Give me a call. Let me give you an idea of what we can get for your property on the market. I know I spoke to you a few months ago about an organization that if your house needs maybe a little bit of work to get top dollar and you don't really have the money to fix it up right now, they can work with you and your agent to get that done for you, and you can pay them at settlement. So you don't necessarily have to go with as is. You've got your families that are out looking now because they want to get the kids settled in the new school before the school year starts. So it says that May is the best month to sell. And this is based on an analysis by ATTOM, Adam Data Solutions. And they found that the average seller gains 5.9% more than market value, the highest of all months in the 5th month of the year. Okay. Now, June is profitable for sellers as well, with an average of 5.9% premium. And the best day of the year, they say, is June 28th. But May 29th and May 31st are high returning days as well, getting you 8.2 and 8.3% premium above the market value of the property. But May is the best month to step on out there. So for homeowners, the key is timeliness, and it says that according to the analysis, the advantage drops off sharply after June, with only a 3.8% premium in July, 4.2% in August, and then 3.2% down in September. And the rest of the year, 1.6% to 2.6%. So again, this is peak time. So as I mentioned to you before, if you want to get just a market analysis of what's going on, if you want your specific property looked at, I can provide that to you. If you want to just kind of keep an eye on what's going on in your community, I can certainly set up a market snapshot for you, and you'll receive that with the frequency that you would like. If you want to see how many days on the market the average property is going for in your neighborhood, I can get that information to you as well. Just email me, Lisa Jeffery, Jeffery 38 at gmail.com, or just give me a call. Like I said, I answer my own calls, yes. 301-542-5168. That's 301-542-5168. I'd love to hear from you. Love to be able to help you make a good decision to move forward and do some great things for your family. All right. So I want to segue from my numbers for a minute. Don't want your head to be reeling with all those facts and stats and all that. I know that can kind of be a little mind numbing from time to time. And I wanted to talk about an upcoming event that's taking place tomorrow. We have three areas that we focus on here at the show. That's real estate, that's housing issues, and that's community development. So I guess this piece would kind of fall under community development. But I want to say that NABWIC, and I'll tell you what that stands for in just a moment, and DDOT, they're going to be co-hosting a STEM-based industry day for its TransSTEM Academy at the Cardozo Education Campus. This is taking place tomorrow, May 4th. And so students in a DC school STEM program are going to have the opportunity to see where their education can take them with respect to Industry Day. So you're going to have representatives from the National Association of Black Women in Construction. That's what NABWIC stands for. Again, that's the National Association of Black Women in Construction. And the District of Columbia Department of Transportation, DDOT, they're going to be joined by professionals to host the 9th annual Industry Day for the TransSTEM Academy at Cardozo Education Campus in DC. Now, the campus is located at 1200 Clifton Street Northwest in Washington, D.C., and the event starts at, let me see, I think I have a sheet that gives me the itinerary. Yeah, the event starts at 8 o'clock. They're going to have a leadership forum for the seniors, opening session. They're going to have a tour of the actual academy, and then they're going to have concurrent sessions. And they're going to be talking, they're going to have them talk to industry and government professionals, role models, about, in like small group sessions. They can really have that good dialogue. And then they're going to follow that with a peer-to-peer dialogue. And then they're going to be awards and a networking luncheon. And then there's going to be an education exhibit. Now, at this exhibit, what they're going to offer is government, associations, private industry, an opportunity to showcase their education programs, the internships, mentoring on the job training type programs, apprenticeships, incubator participation. So young people be able to see all of the different avenues that their education can take them. Now, this if you're not familiar with STEM, I think most of us are. It's a common acronym, but you may not be. STEM stands for science, technology, engineering, and math. Okay, and so they're doing it different from a normal career day, said NABWIC President Ann McNeil. She said because they're going to have small seminars as opposed to just having, the static booth type. You just go through and you get your literature, you look and you go, because they want to make it, I think, probably a little more interactive, and more participatory, for the attendees. And Ms. McNeil was saying that many of the students attending Industry Day are preparing for the future. The interaction between the professionals and the students is a valuable exchange in sparking the passion and interest these young adults will need as they prepare for the world of work. Moreover, we believe that this event will create a platform for blending resources and increasing collaboration and support among the various industry participants. Okay, and so what it does, one of the focuses that I saw for the day, Shirley McCall, who is the founder and advisor to the TransSTEM Academy, had said that we seek to enhance workforce development and to increase the number of our graduates, especially young women, in the fields of transportation, aviation, construction, engineering, and technology. Okay, and what I saw there, because they were looking to have these two types of fields run side by side. If you're doing construction, you're building, whether you're building an office building downtown, or you're building a residential development, a senior community, transportation has to be part of that. Engineering is part of that. So when you have young people that are strong in those skills and then understand how the different pieces fit together, they know how to speak to their counterpart in the other industries so that transportation can work a little bit better with those that are in the construction field to make the planning be a little smoother. Because, those of us that live in certain areas, which will remain nameless, that, it takes a while to get to where we live because it's like only one way in and one way out. Or, wow, when they were planning this road, they should have planned X, those types of things. This is a place where young people can come together and see what's available and what skills need to complement the other skills. So I was just so happy to see this and to see this effort going forth. And I was not, prior to this event, I was not aware of NABWIC. I'm telling you, the more I do this show, the more richness I find in real estate, in construction, in the development of community, from the very physical development of construction to the development of the personality and the soul of a community by providing other amenities that meet the need of the community. So I was just so delighted to see this. And NABWIC was started by Miss McNeil December 12, 1991. And she said that she had received the vision that the National Association of Black Women in Construction, she got that when she was thinking about the vision for her life. And she said from the inception of the concept, it was to be a coalition that represented the voice of Black women in construction. Always the intent was to go back to the junior high schools, and colleges to encourage young Black girls and young Black women to enter the construction industry as professionals, tradeswomen, architects, engineers, suppliers, contractors, subcontractors, and laborers. And I'm telling you, this particular vision is significant to me on a couple of levels. I know a young lady who is a dynamite architect, young lady, and I mean just a genius in that area. And an affiliation with this organization would just strengthen the position where she is right now. And she has a heart for that and a skill for that. When I heard about how, the from the beginning, the idea was to to not only succeed in her particular endeavors in the construction industry, but to then take what she was doing and share that with those that are coming up. Because when we're talking about, the village mentality, the skill sets in our communities, uh, this is how we do that. This is how we model that. And the other reason why it was so pertinent to me, when I was in high school, yes, we had sliced bread in high school, microwaves. Yes, it was not that long, okay? But when I was in high school, I did very well academically. And it was during the time when, it was in the 80s. I graduated in 1980. Affirmative action was, going on. There were quotas and things like that. But my grades merited a number of inquiries from different colleges, and they were recruiting for young black female engineers for their programs. As I've said on the show before, I was raised by my grandmother. She was born in 1898. At the school where I attended, I didn't really have someone that was mentoring me directly with the opportunities that I have. And I don't know about now, but I know then, although I read extensively about a number of opportunities and faraway locations, I personally did not have knowledge of a lot of those things. And I was not able to benefit from the knowledge of someone else that had that experience. I would have loved to have had NABWIC come to my school and to share with me the avenues that I could have explored. So I declined to become an engineer, but my decline wasn't so much because I had such a great passion for so many other things. It was more so a lack of knowledge about the various avenues of engineering and how I could make an impact in those fields. So I truly, truly applaud the efforts in this particular event. And of course, I'd be remiss if I did not give honor and mention to the very distinguished keynote speaker, Ambassador Suzanne Johnson Cook. And she is going to be the keynote speaker. She will be speaking at 1 p.m. The accolades and the achievements, are more than what I can mention here. But what I will say is the Honorable Suzanne Johnson Cook was the first female and African American to hold the position of U.S. Ambassador for International Religious Freedom. Nominated by Secretary Hillary Clinton and appointed by President Barack Obama, she was the principal advisor to the President of the United States and Secretary of State for religious freedom globally. Having all 199 countries in her portfolio, she integrated religious freedom into the foreign policy and national security discussions and worked to empower women leaders around the world. Wow. And she represented the United States in 28 countries and more than 100 diplomatic engagements, bringing faith leaders and women to the religious freedom table. Additionally, she's been the faith advisor to 2 U.S. presidents, 3 cabinet secretaries, as well as political and celebrity leaders. She served as President Bill Clinton's only faith advisor on the historic President Initiative on Race. In 2016, she was the only woman to run for the New York 13th Congressional District. She has been on CNN, MSNBC, Fox, ABC TV. She served Harvard Divinity School as an associate dean and faculty member for 3 years, as a president's administrative fellow. Just a continuous legacy here of achievement. Now, she officiated at the funeral service for her mentor and godmother, civil rights legend Coretta Scott King. She has addressed the United Nations, the UN General Assembly, and UN Geneva. She is an author of 13 books. Okay, so Ambassador Johnson Cook is highly regarded as one who bridges party, racial, and gender divides. I can't think of someone better that they could have had to keynote such a wonderful event. And so again, I applaud the NABWIC organization, DDOT, and also the TransSTEM Academy for what you're doing. And I look forward to following up with you, my audience, on some of the highlights of the event. Okay? And I also want to thank you all for your support. I mentioned the 1441 magazine organization last week that works with the returning citizens, headed up by Mr. Andre Gore, who we're going to have in the studio very soon so you can meet him. But they were able to feed around a little over 330 homeless individuals at their Spread the Love event last Saturday that we announced. And we just want to thank you for your support. If you volunteered, if you donated, on behalf of the organization, I would like to thank you for your participation. So we're just about to wrap it up, but I just have just a couple of final things for you. For my homeowners, if you're still paying PMI, private mortgage insurance on your loan, if you have been noticing that the prices, the sales prices, under contract sold pricing in your neighborhood has been going up significantly, you may want to get an appraisal once you check with your bank to see about getting your property reappraised, that you may be, depending on the type of financing that you have, to see if you've hit that 80% mark where you can get rid of your PMI. Now, if you, like I said, as I spoke before, if you want to get an analysis, a preliminary analysis about what's being sold in the community to see if now's the time to maybe reach out to your bank and find out if that's an option for you. It may, and they agree, and it looks like that might be a favorable thing. It may be worth the cost of the appraisal to find that out. That's just something for you to think about. And again, if you have questions about what I just said, feel free to reach out to me. Okay? And I'll post that one as well so you can take a look. And you guys getting all these links, right? Just another statistic for my single ladies. I tell you, men, I don't discriminate against you, but I tell you, there's just something in my heart when I'm able to hand over keys to a single young lady or a single parent, a mom that has made it to home ownership. It's just really something special about that. And I think for me, it resonates having had that struggle and understanding what it takes to get to that point. But it says that the share of U.S. home buyers that are comprised of women increased to 46% in 2017. It was only 18.9% in 1981. And it says that the share of single women is 18.9%, which is just 9.1% up from which is just 9.1% in 1981. So it's doubled since 81. And let me see. I guess the other one is just over doubling for the women overall. So that's just an interesting statistic. So women, we rock. So if you're a single woman or a woman that is looking to purchase, the statistics look good for you. So I encourage you to keep moving forward. So now we're going to get ready to close out today. Hopefully what you have learned today has been beneficial, has been helpful to you, to look at the numbers and see uh, which are the numbers that you need to be watching. Be cognizant of the rates. Be cognizant of the inventory. Look at what's out there, even if you're not ready to buy yet. Just being aware of what types of properties there can kind of maybe help shape you. But by all means, as I always advise you, check with a lender to see where you are. We're working on some new shows for you, and I'd love to see your ideas, your comments. We always welcome those. So I look forward to hearing from you. Thank you again for your faithful viewership. We really, really appreciate all of you. And remember, I'll see you at the show.